All right, welcome back to another episode of the Black Bullion Show. Now, this has been an up and down, but mostly down week for gold and silver spot prices. It's tough to figure out where things will go next week, but I have an article here that I hope may illuminate some of that for us in case we were trying to get into some gold or silver. Obviously the weekend is always a great time to get some bullion, as there's a brief pause in the spot markets. Now, if it's low enough, then you're in the money pretty much. But let's see how things will shake up for prices. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so Kitco has a new one out entitled Gold Price Action Next Week is a Coin Toss Among Analysts. So let's see if we can make heads or tails of things. So let's start. With gold prices finding strong resistance around $2,000 an ounce, the market has become a two-way street, and the price action could be fairly volatile as short-term sentiment continues to drop, according to the latest results of the Kitco News Weekly Gold Survey. In fact, investors might just be better off flipping a coin. The decline in sentiment comes as the gold market prepares to see a second week of losses after hitting an all-time high. This week, 15 Wall Street professionals took part in this week's poll. Sentiment was evenly split among the bulls and the bears, with each side getting 7 votes for 47%, one analyst for 7% expected prices to trade sideways. Among retail investors, Kitco's online survey saw the biggest participation on record. However, sentiment has dropped to its lowest level since the start of the year. A total of 2,830 votes were cast in an online Main Street poll. Of these, 1,596 respondents, or 56%, looked for gold to rise in the next week. Another 702, or 25%, said lower, while 532 voters, or 19%, were neutral. So here's the Kitco Gold Survey. As you can see here, Wall Street was kind of split down the middle. Main Street, people were bullish, and of course we're going to be bullish because we like gold, obviously. But let's continue here. Last week, as gold saw its biggest weekly drop since March, both Wall Street analysts and Main Street looking for prices to recover. However, gold is preparing to end the week with a modest loss. December futures last traded at $1,945.80 an ounce, down 0.15% last Friday. Now, I'm going to skip some of this here and basically go down to the bottom. However, although volatility is expected to pick up in the gold market, many analysts are maintaining their long-term bullish forecasts. And one of the other bits here is that, they're seeing the dollar gaining in strength is one of the reasons why. There's a short-term correction happening here from its pretty much broad decline. That could be one of the reasons why gold and silver are being knocked down. Now, it looks like, again, it's going to be 50-50 next week, with the dollar being a big reason, according to Kitco, as to why we could have a 50-50 split here as far as what could happen going up or down in price. However, I'm going to distribute Kitco's 100% weighted metric of the DXY over the DXY and real interest rates. Now, here's a reason why. Let's take a look at real interest rates. So here we are. We have the Fed, Economic Research, Federal Reserve, St. Louis. Here we have negative real rates. And the Fed has info as recent as Tuesday. So here we are, Tuesday, August 18th, 2020, showing real rates making a reversal back below negative 1% after recently getting as high as negative 0.94% on Friday, August 14th. So we've been trending back down lower. And as we've been seeing the 10-year trend lower in nominal terms in the past couple of days, I'm sure the most recent numbers for the real rates are even lower than this negative 1.01 number here on Tuesday. So I can't wait to see what today's number looks like, as we saw nominal rates trend even lower. Now, that's not the most interesting part of looking at this graph. We actually hit negative 1.08% on Thursday, August 8th. Now, you know what else happened on that same date, on August 8th? Well, silver actually hit a near-time high of $29.37. It's the highest it was in recent times on August 6th. Let's take a look at gold. Gold hit its all-time high on August 6th with $2,070.05. Now, the 10-year yield wasn't the only reason why this happened. The DXY also hit its second lowest point year to date of 92.79 on August 6th. So essentially what I'm trying to say here, guys, is that the 10-year trending back lower, which is, is helping gold and silver find support right now. But that's only 50% of the problem. Now, the other 50% is the DXY. We need that to go back down into the 92s. And we also need the 10-year yield to keep sinking lower and lower, because you're not back in the 0.5s yet, as we were a couple of weeks ago. Now, earlier in the video, we saw in the article that they said investors might as well just do a coin toss. So this is what I'm going to do. I'm an American here, so I got my American Gold Eagle, and I'm going to do a coin toss. So this is what we're going to do. If it's heads on Lady Liberty, we are going to say that the price is going up by the end of next week. If it is tails, then we are saying the price is going down by next week. So I'm gonna have to put a little bit more oomph in this, because an actual ounce is much heavier than a normal fiat coin. So here we go. I'm gonna flip it on my hand. Oh, and wouldn't you know it, Lady Liberty, it looks like it's going higher, guys. I don't make the rules. Lady Luck and Lady Liberty do. All right, guys. So we may actually have prices trending up. But thanks again for watching this video. Hope you enjoyed that. Just had a little fun at the end. Please hit the subscribe button. Also, please hit the like button. Let me know where you think gold and silver are heading next week. All right, it's Black Bullion.